Welcome to RealCast, the weekly roundup of the real asset markets. My name's Richard Betts and I'm joined by Nicol Dynes, Giles, Barrie and Dan Innes. And we'll also have a special focus on the retail and office markets as well as France. But let's start with the roundup of the week. Giles, what have you been following?
Well, I think the big story over the last week, Richard, we had Super Saturday when everyone started going back to pubs and restaurants. I think the real thing that caught my eye was on Monday, a big piece in the Financial Times where they talked about the return to the office. This is the next big thing that the government has to think about, I think. At the moment, the instruction is to work from home if you can. There was a piece in the Sunday Times a couple of weeks ago saying that should change to work from home if you want to. There's also increasing discussion about the warning to stay clear of public transport, whether that should be lifted. Because if people aren't working in the middle of big cities and towns, that has a huge impact on associated retail, associated leisure, the future of office buildings. I think that's the really big next dilemma that the government has to think about.
In a lot of the interviews, particularly actually over the last 7 days, there's been more people who've been in their offices, and that's quite encouraging to see also in the UK, but especially across continental Europe. I've been seeing that. I also noticed Charlotte Freeman was going back into work there at Colliers. Dan, what have you been following?
For me, it's been the big story of the week was about the Gare du Nord railway station in Paris. They've just achieved a construction permit to redevelop that site. It's a £600 million project run by SNCF, that's the National Rail Service, and mixed-use developer Citrus. But it's set to grow from 35,000 square metres to 124,000 square metres, mixed-use. It's going to have about 46,000 square metres of commercial space, retail, offices, fitness centre. But it's due to start later this year, and that's in a bid to be complete by the time that the Olympics arrives in Paris in 2024, which might be a little bit ambitious, but aren't all Olympic projects. So elsewhere, Singapore-based Sun Ventures bought a mixed-use asset called 1 New Oxford Street in London from Nuveen, who are acting on behalf of British Airways pension trustees. Deal was about 180 million euros, and it's the first acquisition for Sun Venture, so that's quite interesting. Nuveen actually originally bought that project in 2004 and did a full renovation of it that was completed about 2 or 3 years ago. But yeah, I mean that's so it's fully let already to the likes of H&M and an Amazon subsidiary Twitch. And lastly, my story really was on logistics, which I know is a real burgeoning sector now. It's really gaining real traction. And that was Gazeley completing a €1 billion Central and Eastern European deal. Around the same time, they've also adapted the GLP brand name, having acquired that investment manager in 2017. But this deal includes 1.3 million square meters in Poland, the Czech Republic, Slovakia, Hungary, over 40 different sheds around there. And that means that they're Gazeley now operating in about 11 countries. So, that's not bad considering GLP first entered the European market only about 3 or 4 years ago. And lastly, closer to home, we've got AEW and Allianz UK's logistics venture. They just acquired a £50 million logistics scheme from Caddick Developments. That's about 500,000 square feet. It's called Wakefield 515 up in Yorkshire, 28-acre site. And that's expected to start this month. And it means that this new €290 million venture, which they formed last March, it has about 1 million square feet of completed developments, and sort of comes at a time when really this, the logistics market is showing, pretty great rental growth and good occupancy levels.
Last week we mentioned Tritax making all of their new developments carbon neutral. This week I saw Prologis announcing that it was the first real estate company on the S&P 100 to achieve operational carbon neutrality. Also, I noticed, and thanks Andreas Trump for flagging this up, that the US may need another 1 billion square feet of warehouse space by 2025 as e-commerce booms. Interesting, one of the appointments that came in, it was flagged up in June, but actually Logan started in July, was Logan Smith joining Hines as head of European logistics. And again, I think that signals a desire from some of these very big players to focus much more on those logistic markets. Nicol, what were you seeing in the events? Obviously, we were looking at France, office and retail. What were your key takeaways?
Well, France, it seems to be short-term pessimism and long-term optimism, as was mentioned with the Gare du Nord project. So things are happening, but they're mainly happening. It's mainly domestic investors. The crisis seems to have led international investors to very much be in wait-and-see mode, while domestic investors are making the most of it. But certainly take-up and investment volumes have fallen sharply in H1, and there seems to be a belief. Real Asset Media did a poll. The vast majority believe that investment volumes will not return to pre-COVID-19 levels until December 2021 or later. So there's an expectation that things will return to normal, but not for a while. And in the meantime, there's very much a flight to quality. Prime assets in the Paris CBD are very much sought after still, where people are very hesitant about investing in non-core and also in other locations in the suburbs. And we also did an office event, Future of Office, which obviously, as was mentioned by Giles, is very much a current theme. One thing that struck me, someone said it's a Netflix moment for the office sector. If people don't realize it's got to change, it's got to become more flexible, more adaptable, more tenant-friendly, then they will become the blockbusters of their generation, which gives an idea that, yes, the office sector will survive. We will just have to change and adapt. And the key ask seems to be flexibility on all fronts, whether it's lease contracts, whether it's the fit out of the building, down to very, obviously environmental sustainability, down to small things that were mentioned, like being able to open the windows, something that tenants ask. So it's down to, from big projects down to the smallest details to make tenants happy.
There seems to be a big kind of divergence between those who think that office will change fundamentally and those who think that the flexibility will come through, but actually this is a trend that's been running for a while.
I agree with the second half, Richard. Look, if you're a young person who's sitting at home and has been for months, either working from your bedroom or a shared living room, or a graduate needing mentoring, it's probably a terrible thought that you'll be sat doing that for the rest of your life. It's just not right. So I think we'll all return to the office in a different form. I think the other interesting thing, just going back to the logistics, Richard, is there was a big interview with David Sleeth, the SEGRO chief executive, in the Telegraph on Monday. SEGRO is a huge success story, market cap above £10 billion now. I think one thing that was interesting with the government announcements this week that Dan mentioned, no mention of logistics in either Boris's statement or Rishi Sunak's statement. I think what people are hoping for now, that they'll be third time lucky when the government reforms planning, is that there'll be much more focus placed on logistics, warehousing, being close to new homes. This is becoming a really, really key sector, and was shown to be so during the height of the pandemic.
Nicol, in terms of the retail side, what were your key takeaways there?
Well, there was a very interesting PwC study that showed that, as we know, there was a surge in e-commerce during lockdown. The conclusion was that it's not a temporary thing, it's a permanent thing, that consumer habits will have changed permanently after the crisis, and that retailers have to adapt. So very much like in the office sector, will be a mix. So there will be a combination of online and physical retail, but the physical retail will have to change and adapt, just as it did, becoming more entertainment and more experience focused. It will have to change again. How, what will be successful is not quite clear yet, but definitely an ongoing evolution of the sector, and but with sort of some hope of a light at the end of the tunnel.
Thanks, Nicol. And I also noticed this week on the kind of negative side, some of those trends coming through in terms of job losses for retailers, with particularly John Lewis, Boots, and also Burger King announcing job cuts, particularly in the UK market. And it'll be interesting to see how that develops particularly. Thanks very much for joining us. Thank you, Giles. Thank you, Dan. Thank you, Nicol. Next week, we'll be taking a look at student housing. And on that topic, I particularly noticed that Will Rowson had recently joined GSA Global Student Accommodation as CEO. And I think that indicates the interest, particularly in that area, and also a more positive take, I think, on student housing going forward, given some of the data that's coming through. So thanks very much for joining us, and look forward to seeing you next week. Thank you.